We're going to check out a couple of growth and income stocks now with our growth and income equity strategist, Todd Bunton, who joins me here. You cranked up the old radar to come up with a couple of interesting stocks here. Microchip Technology is one of them. Let me guess, they make microchips.
Exactly, yep, you guessed it. Yeah, so they specialize in semiconductors, obviously. Microcontrollers, that's their largest segment, about 65% of total sales. And those are just small little embedded units you can find in a variety of electronics. Actually, a large part of their end market is in autos. So, in cars, of course, they have chips in them now. Microchip, that's a huge end market for them. Very international company too. About 84% of their sales come from outside of the U.S., with Asia as their largest market at 60% of sales. So a very global company. And if you look, estimates have been rising for this company pretty steadily over the last several weeks. And that's been driven by continued market share gains, and they've also seen general economic and semiconductor industry improvement. So good, good momentum here on the earnings side. You can see a nice bump in consensus estimates. That's driven it to a Zacks rank of 2, which is a buy rating. And based on consensus estimates, analysts expect about 15% earnings growth from this company this year and 14% growth next year. So nice double-digit earnings growth to go along with that solid momentum. Also very good income, which you don't often see from a tech company, but they pay a dividend that yields 3%. And that's driven because they have a very solid balance sheet, they have very wide profit margins, and they generate very strong free cash flows. So very shareholder-friendly company here. And if you look, the valuation's pretty reasonable too. They trade about 18 times forward earnings. Historically, over the last 10 years, they've traded around 20 times. So maybe a little bit of value to go with that growth and income. This could be a good, solid total return pick over the next 6 months.
All right, this other one seems to be a little trickier to pronounce. I'll let you correct me if I mess it up. LyondellBasell?
Yeah, I've heard it either way. So yeah, LyondellBasell is the most common way I've heard it. But
global plastics company.
Yep, yeah, plastics, one word, plastic. But they actually do several things. So they do also chemicals and refining. They also have a variety of end markets too. So their products end up in a lot of stuff that we wouldn't be familiar with the name, but you know their end products. So they're in packaging, electronics, also in autos, home furnishings, medical supplies, on and on down the list. Very diverse end markets. But their biggest segment is olefins and polyolefins, and that's been driven by the U.S. shale gas revolution here in the U.S. and lower raw material costs. So that's been a huge growth driver, huge profit margin expansion there. And that's led to analysts to revise their estimates significantly higher. So very good earnings momentum here. Brought with me the price and consensus chart. You can see a nice bump in consensus estimates after a big second quarter beat back in late July. Sent it to a Zacks rank of 2, which is a buy rating. Very good earnings momentum, very good growth story. Based on consensus estimates, they're looking about 19% earnings growth this year and 14% growth next year. And along with that, of course, you're getting good income. They pay a dividend that yields 2.5%. Actually increased that dividend by 17% earlier in the year. Very good income play here. They've increased it 6 times over the last 3 years as well. And that doesn't include 2 special dividends that they've paid out. So very shareholder-friendly company. They're buying back a ton of stock as well. And valuation looks very reasonable. They trade about 13 times forward earnings. Industry median is 15 times. So there's some value to go along with the growth and income. Again, looking out about 6 months, I'd say this is a solid total return pick. This one, as well as Microchip Technology, though, the risks here are, they are tied to the global economy. So, if global economic conditions weaken, these might be names you'd want to avoid. But so far, the 6-month outlook looks very solid here.
Okay, do you own either one?
I do not.
All right, check out other stock picks and stock picking strategies. If you're not on our website, if you're watching this in syndication, get on over to Zacks.com. Link to them right off the homepage. Meantime, with Todd, I'm Terry Ruffalo.